Today we're going to talk a little bit about globalization, what it is in terms of a textbook definition, how you can see it, two facets through which you can see it and observe globalization around the world. And we're also going to talk about the drivers of globalization. Why has it been accelerating so much and why has it become so prevalent? Although many different people have different attitudes towards and definitions for globalization, the best and most precise definition we can use relates to the trend towards a more integrated and interdependent world economy. That's it. It's that simple. It's neither a bad thing or a good thing. It's just explaining something that is going on. So how can we really observe globalization, and how can we really understand that it is in fact something that is going on in the world? There's two facets to globalization, the globalization of markets and the globalization of production. So thinking a bit about what the globalization of markets mean, it means that you had markets all over the world that were historically separate for reasons of geography, for reasons of culture and preferences, and for reasons of different levels of economic development. What we're seeing now is a convergence of people's tastes in terms of what products they'd like to have. If you imagine big global brands like Apple with the iPhone or Coca-Cola, you start to appreciate the idea that one product or service can cater to the needs of multiple types of people all around the world. And that's the globalization of markets. What do we mean by the globalization of production? This has to do with the fact that the means of production, actually how goods are manufactured and assembled, has been distributed all over the world as multinational enterprises have sought to find advantages through countries that have certain factor endowments like metals or minerals that are required for the construction of computers and microprocessors. Or perhaps it's a low cost of labor if you're operating in a commoditized market like casual clothing. Or maybe it's a higher order factor endowment such as a well-educated workforce, which might lead you towards one country or another. Multinational enterprises have gotten very good at figuring out what to do where and to construct this sort of web of production in order to make their production as high a quality and as low a cost as possible. So that's a little bit about globalization, its definition, and how you can observe that it's going on. We're going to talk a little bit about some of the drivers of globalization, because these are the things that are really putting gas to the combustion engine of the world economy. And here we've got two really big ones. There's been declining trade and investment barriers since World War II, and there's also been a relentless improvement in technology and the pace of technological change in the same time period. Both of these factors are combining to make the effects of globalization more and more profound with each passing year. So let's start with declining trade and investment barriers. You don't have to go back too far in world history, sort of the beginning of the 20th century, to find a world where the nations of the world that were trading with one another had very high tariffs. France was sitting in at around 22%, the United States at 44%, Sweden would have about a 20% tariff rate on goods being shipped into their country. So this stifled competition and availability of goods. The story of the 20th century had been the gradual reduction of these barriers to trade until you get to sort of 2000, 2010, 2014, you're seeing that average tariff levels were less than 2% in the major industrialized countries around the world. And what was happening as the tariff levels were going down, and here we're going to look at a period of time, 30 years really, from 1980 to 2010. And in 1980, there was an average tariff rate of around 10% that in a 30-year period towards 2010 dropped to about 5%. So it cut in half, right? Well, what happened to global trade in that same time period is it tripled from $5 trillion a year up to $15 trillion a year. So the effect of a reduction in barriers to trade and investment has a multiplying effect on the quantum of global trade. We think about the role of technological change. Since the end of World War II, we've seen the advent of the microprocessor, lowering the cost of global communications and improving efficiency. We've seen the internet just explode, and it continues to explode. From 2012, you had probably about 2.5 billion users, and then 4 years later, you're looking at another billion added to that, right? If you think about global e-commerce, go back to 2012, it was about $1 trillion globally, but by the time you get to 2018, you're already close to $3 trillion. So we're seeing this growth just continue, getting more and more parts of the world involved in the global market. Last but not least, you've got travel getting cheaper and more accessible. This is commercial jet aircraft. It's large freighters, and it's containerization, these big metal boxes that you see on trucks and trains and ships that enable things to move around the world much faster than they used to be. So if you remember nothing else through this session on globalization, do remember the definition. It's this idea that we're moving towards a more integrated and interdependent global economy. Do remember that you can observe it in the convergence of markets and the distribution of production, and remember the things that are really driving it on are declining trade and investment barriers and the role of technological change.